Hey y'all, this is Audra Hicks with Simply Home, your Tennessee Realtor, and I'm here with
Michael Dean Church with Fairway Independent Mortgage.
And today he's going to talk to us about the mortgage process. So stay tuned because I put the real in real estate. Okay, so Michael, can you tell us about the mortgage process?
Absolutely. So most people think that the mortgage process is a big scary thing to do. It's really not. We make it very simple over here at Fairway. It's really literally a matter of filling out an application and uploading some documents. We advertise a 4-hour turn time from start to finish on pre-approval.
That's awesome.
So it's basically, as you're filling out the application, our system knows if you need to provide tax returns, if you need to provide W-2s or pay stubs, and then you upload all that stuff into the portal, and then we go through everything, pull credit, and call you back to go over all your options.
Well, that seems like a streamlined way that y'all do things at Fairway.
Yeah.
So what makes y'all different than other lenders?
So Fairway is a nationally recognized lender. We actually just won the J.D. Power Award for
awesome.
Customer service in the whole United States for all mortgage companies.
Oh, that's cool. Congrats.
I know. So we took that from Quicken this year, so we're pretty proud of that. So
that's good.
Yeah. So, I mean, Fairway just does things the way the name says. We're fair. We do everything the fair way.
That's awesome. So what are the things that most buyers need to provide to y'all up front?
So it would depend on the buyer necessarily. I mean, sometimes if you're self-employed, you're going to need 2 years worth of tax returns. If you own a business, you may need your tax return for the business. You may need business bank statements, personal bank statements, driver's license, social security card, blood sample.
Firstborn.
Kidding
No,
on
just
that.
kidding.
But no, we try to make it simple. I mean, sometimes it's as easy as a pay stub and a W-2.
Okay. So you have different programs for the self-employed too.
Absolutely.
What would they entail?
So if sometimes, being self-employed, you have the benefit of writing off a lot of your income, which is great for the IRS, but not so great when you're trying to buy a home. So we have some programs available for that where we can do like a bank statement loan. So basically we can take 12 months of business bank statements, add up all the deposits into the account and divide that by 12 and use that for income.
So y'all have good creative financing
Absolutely.
for the self-employed.
Yep.
Which me and my hubby's always been self-employed, so I get it.
Yeah.
Now on the buyers that work and do W-2s, what all kinds of things? They're much easier, streamlined.
Absolutely.
Right?
I mean, pretty much if you're a W-2 client, as long as your income qualifies, you can qualify for most every program that's out there.
Okay.
You have to meet certain debt-to-income requirements and fit within the threshold of that. But, I mean, pretty much everything's open to you at that point.
And then you always hear that when you pull the credit, you have 3 different credit scores and y'all go with the middle score. Why that? Everybody asks me, why do they do that?
Because because certain credit bureaus follow certain regions of the country. So if you, for instance, grew up in California and you just moved to Tennessee, your predominant credit score is not going to be Equifax because Equifax is based out of Atlanta. Yours is going to be like TransUnion, who's based out of the West Coast.
Right.
So we pull all 3 because there's some creditors that report to one or some creditors that report to this one and not this one. So it's the best way for us to get an accurate picture of what your credit score is.
Oh, okay. So when I have said buyer and I send them, do I just send a link from over to my buyer so that they can go fill out everything?
Yeah.
Or just, I know you enter your phone.
Yeah.
I know how his process is, but I'm just trying to go over it with the video. But
yeah, so
what
I
do
mean,
we do?
you could share the mobile app. We have a cool mobile app that you can share with the clients, and that actually allows them to apply on their phone and upload their documents on their phone. The other cool thing is that also allows, as the loan is moving through our system, the process, they get text notifications through the app that tells them, hey, your loan's in processing, your loan's in underwriting, your appraisal's back,
Right.
clear to close. All the different milestones. You as an agent and them as a client get notified real time as we're moving through the process.
So what about your old-fashioned clients that don't have technology and stuff?
So we would be glad to meet with those people in person or do the application over the phone. We always try to make it as easy as possible.
So you'll actually send your assistant to pick up everything then?
Absolutely.
Need be?
Or we'll have them call you and have you send
And
it.
I'll do it. I know. I've done that many times over the years. we just want to make it as
yeah, absolutely
simple as possible and take the headache off our clients.
Right, and it's not scary. People think it's a scary process. It's really not.
No.
I mean, you can buy a home start to finish in less than 30 days.
Right. Yeah, I've had them buy them in a day. Not through a lender, though. You know, they're cash. But
we're closing in 8 days.
Yeah.
So
I mean, it happens. So it don't have to be terrifying or anything. So that's the mortgage process. What kind of loans are you seeing more of right now in this market?
A lot of government loans because they require less down payment. So a lot of FHA, USDA, THDA type loans. And they're easier to qualify for those loans because usually you can go down to a 640. Some of them you can actually go down to a 580 credit score on. But most of those people that are in that 580 to 680 range are going to fit better in an FHA or a government product because the rates are going to be better for them.
Right.
Because conventional loans are so score driven that they are based off of their credit score heavily. So if somebody's got a 640 and they're trying to do a 5% down conventional, they're going to come out way better on an FHA because the rate's going to be probably
I've had clients like
less.
that they started with conventional and then they flipped them to an FHA.
Yeah.
Their payment was even going to be less. I think they had less. Their PMI on the FHA was less than the MI on the conventional.
Yeah.
They're like, why would I not do that?
And that's part of our job as a lender is to find the best scenario for the client because it's specific to each individual.
Right. Everybody's different.
Yep.
That's what makes the world go round. Here we go. So, but we'll just try to take the headache out of buying. And I thought it would be cool for you to tell us what the process is on your end to help people
absolutely
feel better about it.
And don't be scared to apply. Like we do credit coaching all the time where we help people get their score to where they need it to be to buy. So just because it's not a right now doesn't mean it's a no. It's just a not right now. So we'll help you get there.
Yeah. I've had many that have taken only a month to 3 months and then sometimes 4 years before they buy.
Absolutely.
It depends on the client too.
Yep.
And if they're going to listen and do what you tell them to do.
That's the biggest problem.
That's the big thing. Yeah. So I appreciate you telling us about the mortgage process today. And if you like my videos, please like and subscribe and share with your family and friends. Thanks so much, and I'll see you soon.
Thank you. Merry
Bye.
Christmas.
Merry Christmas.